Hello and welcome to Free World Investing. Today we're going to be going over the ADX indicator. It's also known as the Average Directional Movement Indicator. This indicator was made back in 1978. And honestly, I go through this indicator and really what's supposed to happen is it's not like a measure of price or volume or momentum really. It's really supposed to measure the strength of the trend. And anything, 25 and in between 25 and 30 is pretty weak. Well, no, 25 to 50 is pretty strong. Anything below 25 is pretty weak. And 50 to 75 is very strong, and 75 to 100 is extremely strong. But you rarely will see anything over 50. Not really. And yeah, sometimes, look here, you can see where the trend's at 50, and it still continues going up, and it stays at 50. Yeah, that worked pretty well. And then as soon as it starts going down, you get the sideways market, and you have the sideways market right there. And then as this is going up, we're back into the trend again. We're back into the trend. It stays right here, and then boom, back down. So really, it is a good measure for the trend sometimes, but overall, personally, I really don't think this indicator is really all that great. I feel like you could do better with a lot of other indicators like stochastic and RSI and just many other indicators that are better at measuring what's going on. But that's just me. Like I said, sometimes it might be good to use this indicator, and especially when it's at the extremes like this, like once it hits 50, yeah, that's like a good time to stay in the trade or to even come into the trade. Once it hits 50, that's a good time to do it. And sometimes, maybe 40 as well. Anything for me, I think anything under 40 is just kind of like, it's kind of still kind of ranging. It could reverse at any time. And even here, once it hits 50, it had a quick reverse. Well, actually, now it hit 60 here, but there's still a pretty quick reverse, and because this does not actually supposed to measure price at all. But at the same time, a lot of times when you see it going down, you'll see the price going down as well. It's not really always supposed to do that. Even when the price is going down, if it's strong in the trend, it's supposed to still eventually go back up. And sometimes because of that, you get conflicting data because of the way trends work. When you had the trend bounce off of another trend really fast, it makes this indicator hard to read at moments. But like I said, when it hits 50, that's probably like the best time to use this indicator. If it's at 50, it's normally either a good time. It's a good time to enter into the trend and to continue its ride for a little bit until you get a conclusive, you know, downside to that trade. If you start losing money, then it's a good time to get out. Or if you feel like you've made enough profit on the trade and it looks like it's about to reverse trends, then it's a good time to get out. But that's really about all there is to the average directional movement index and how to use it. Uh, if you like this video, please give it a thumbs up, subscribe to the channel, and check out our other videos. I hope you enjoyed. You'll have a good day.